Tradespoon. My name is Vlad. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions. Get ready for the earnings season that will start next week. Get ready for the, big beautiful bill, big beautiful tariffs, and how it can impact the market and where the opportunities in the market are. For those of you who are new, welcome. This is my brief bio. TY, is this your first broadcast? Let me know. I can speak more about my experience. But my background is artificial intelligence. I have a master's degree in computer science, was a CTO of several publicly traded companies, always been in fintech space in Chicago, worked for broker-dealers, hedge funds, started Tradespoon 12 years ago. So it's been a while. And in the past year and a half or so, Keith from Options Hotline has joined me, and he also leads the live trading room, which we have twice a week and twice a day, open and closing bell. His background is market making, working for hedge funds. He's an expert in options trading. Really has brought a lot to the table, and I think this is if you want to learn how to trade stock or options, or if you want to find good signals, this is the place to be. Disclosures, very important. If you're new, I encourage you to visit optionsclearing.com to understand the risk associated with trading stock or options. I'm not a financial advisor. I'm here to show you what I do in my own account, based on my own risk tolerance level for general education and information purposes only. Right? So I do trade these signals. I live the same signals. I don't just provide signals. We actually trade them, manage them, and have kind of the same exposure as you guys do. Before we jump into a trading plan, first of all, any questions? Second of all, let's talk about current market conditions. So if you look at the stock forecast toolbox, right, the question is what to expect next. This is a great place to start to set your opinion. Short-term model sees slight uptrend, still positive uptrend. 624 is the buy, 628 is sell. We're at 623. Model doesn't see a lot of momentum below 620 level and continue upward momentum, potentially reaching 640 level in the next, going into end of July as earnings season unfolds. Obviously, it's a big assumption. This is based on the current price action, current momentum. Model is not even being trained or trying to learn what the earnings season will look like and earnings consistency, right? So that's unknown. We'll see. Banks are going to Delta Airline hit a home run, right? It was a 2 standard deviation move yesterday, so to the upside. And then we're going to have banks and investment banking next week, and that will set the tone whether we're heading to 640 or we're going to break below this key support level. If you zoom out, if you look at the 6 months prediction, it doesn't see a lot of momentum outside of 620 level. So market is already overbought, right? We've been a lot of people, I think, surprised by how quickly we recovered despite all the uncertainty and, still potentially 30% tariffs on Canada, Mexico, Brazil, copper, China. So all of that hasn't changed, but the market is making new highs, right? Kind of was the idea that, the tariffs will not impact, earnings and macroeconomic data. So that's the second data point. I would look at the seasonal chart. Let's see. July has been a strong month, especially for the past couple of years, right? So still model sees 90% correlation, very high correlation, higher highs. And basically July is usually a strong month. It reaches the peak, right? It consolidates towards the end of the month. And then you do have a pullback either in August or September. Smaller pullback in August, bigger in September. So in the past couple of years, we've seen these pullbacks either in August or September. And I think this is a repeat of the 2018, the first administration, right? So when the tariffs, when White House decides not to move the deadlines forward, market will react, right? As long as we're moving from, May 1st to June 1st, June 1st to July 1st, or 9th, July 9th to August 1st, as long as the deadline's moving forward, the market dismisses. But at some point, the deadlines will not be moved forward in terms of tariffs, and some of these tariffs are higher than current 10%, right? 20, 30, 15. So then the market will react. So I would be cautiously optimistic and just always keep an eye on your cash portfolio, cash position and risk. I was looking at the gamma, right? Looking at SPX gamma, got 618. So short term, the gamma flip is 618. A lot of people say, well, Vlad, I'm not an option trader. Why do I need to look at these gammas and Greeks and delta exposure? It's meaningless. Well, even if you're not an option trader, going back to game theory, right? Everybody who's a trader has to understand game theory. It's not what I think, it's what other people think is a lot more important than what I think, right? Because if majority has a different opinion from mine, that doesn't matter, right? The market will move with the majority of the people. This is the futures data, right? And the options data, the positioning for institutions, for retail is extremely important, right? It drives the market, especially with the recent surge, right? Exponential surge in options trading, 0 days to expiration options. They do matter. They set support, they set resistance, and right now the flip point is 618. Red means that if we break below 618, we might have acceleration to the downside, reaching either 6,000 level, 6,100, depending on the news. But as long as we're above 618 level, or SPX 6185, currently we are at 6247, it's green. Green meaning that dealers, right, the dealers will have to step in and be delta and gamma neutral. That means the only way to achieve it is to buy the stock. So bottom line, even if you're an option trader, green means it's a supportive environment where the pullbacks probably will be shallower, and you might want to consider, going long. Obviously, overhead resistance, the gamma exposure, the highest gamma exposure is 6,300, the call, right? So that's something to consider. And you can look at instead of SPX, SPY. I mean, they're obviously highly correlated, but positioning is a little different, right? Position could be different. So SPY, the gamma flip is actually 622, right where we are now. Put wall is 620. So the highest put wall concentration is actually at 620. So 618, 620 is an important level, right? And I think market will, for now, be supportive of that level. So then the question becomes, well, what to expect into July expiration, which is next week, and then August expiration, right? In terms of expected move, right? What are the different scenarios? And I encourage you to go through these scenarios, right? So you can determine the risk, right? Why do you go through positive and negative scenarios? Because when there is uncertainty involved, you want to make sure that you consider both scenarios. That will help you determine position size. Position size is the most important. So the model says 640, right? Potentially we can reach 640. That's one standard deviation to the right. I agree. Right? So that's one standard deviation move. We're looking at this is implied volatility. So expected move is based on supply and demand of options, right? And trading is about distribution of possible outcomes, right? Kind of this bell-shaped distribution curve. And this is a 1 sigma move, right? Somewhere 600 level, 610. On the downside, on the upside, 1 sigma move is 640, right? 2 sigma move, we're in the earnings season. So if there's no signs of inflation and companies are printing cash, well, then you're going to have scenario number 1. We're going to break above 640 and 660, get to 640, 660 by end of July, end of August. Scenario number 2, we're trading in this 70% of the time, 1 sigma move, going back to your statistics class in high school. If you forgot what sigma is or what standard deviation is, I encourage you to review that. as a trader, you need to understand basic statistics, right? What is the 1 standard deviation? What is the 2 standard deviation? What are the probability stock trading in certain range? Because trading is about probabilities, right? You can have an opinion, right? You need, market range bound, market going to go up, market going to go down, but you have to have reasonable expectation what happens 70% of the time, right? If you don't have that mindset, then that's something that's the goal, right? To work toward that goal. And then scenario number 3, we're dropping below, maybe signs of recession, maybe the unemployment ticked up in July, maybe CPI and PPI data goes up, maybe, JPMorgan and General Electric will come out and say, hey, inflation is here and we're paying much higher prices for aluminum. We're going to pass it to consumers, and that will impact our bottom line, top line, and consumer in general. And you have scenario number 3. So how many of you say scenario number 1? How many of you say scenario number 2? How many of you say scenario number 3? Just type in 1, 2, and 3. Why is this exercise important? I do it every week. I do it during live trading room every time, because trading, first rule is, it's a distribution of possible outcomes, probabilities. Second, it's all about position size. You could be incorrect about 1 sigma or 2 sigma. You can be incorrect about red or green, right? You think it's green, but it's going to be red. You think it's red, it's going to be green. All of that is fine. That happens all the time. But if you're wrong about position size, right, and that's a personal decision, right? Everybody has managing different amounts of money. Everybody was raised in different families, different backgrounds, different education. Some people are, right side of the brain is more developed. Some people left side is more developed. But universally, you got to get position size right. And if you don't, that's when you have problem, right? The drawdown of your portfolio. If your portfolio down more than 20%, we're all trading based on emotions. Not all, but majority of us, right? Your adrenaline goes up. You can't sleep at night. You're upset. You want to avoid that. How can you avoid that? Since we're all kind of humans and we're wired similar way, the only way to avoid this is why decide position size. You talk to any professional trader, it's the same answer. You get your position size correctly, you will be successful. You make mistakes on position size over a long term, that's an issue. So you go to these exercises to determine, right? If I think market is going to go to 640 or 660, I want to know, well, how much money am I going to risk, right? I propose to say 600, right? This level, right? So if you're buying at 620, where we are, 624 now, so if you're buying at 624, if you day trader, I would use the flip point, right? Gamma flip, 622. I think the low of 618 based on SPX level. I would probably go a little bit to the left. If you're doing day trading, right? If you're thinking about weeks, maybe 610, 615 level, right? Your stop loss. I mean, if you're just more conservative, thinking about a month, right? Longer term, medium term, I would use give myself a little bit more room, 3% to the downside, 600. Then I can determine, well, the idea on the $10,000 account, I propose not to risk more than $250, right? $250. All right, so then if you say, okay, my stop loss is 600, right? If my stop loss is 600, right, I'm risking, let's say, 25 points, right? If I'm not $25, but 25 points. If I'm risking 25 points, well, then I just take 250 divided by 25. Then I know, okay, I can buy 10 shares. Okay. So this process is important, right? A lot of people don't do this because nobody wants to think about red, right? The reason our brain is wired to avoid reds, to avoid pain, right? But as a trader, you have to consider positive and negative scenarios so you can determine position size. So how many of you say 1, 2, and 3? Anybody? Andre 2, TY 2. All right, most of you said 2. I'm gonna go with 2, range bound, right? I don't think we're gonna hit a home run during earnings season. So far, hard economic data does not support, right? Kevin said, well, high tariffs are causing, currencies to increase value in dollar and decrease. All of that is true, but you don't see it in hard economic data. You don't see it in earnings press conferences yet. So, if we do see it in hard economic data, or if we do see it during earnings calls, then yes, market will sell off. But until then, it's range bound. And I think we do trade somewhere between 600 and 640 going into, end of Q3, right? September, October, that's going to be interesting. And I think I would be aware of potential stronger pullbacks. Until then, that's my opinion. How do we help at Tradespoon? So we went over some of the tools, right? We have research, seasonality chart. You can look at the probability calculator, right? So all of that we have, right? Again, 612 support. This is historical volatility, right? Looking at the historical volatility, 612 your support, 640 is your overhead resistance. You look at the options data, gamma data, position data, shows you similar information. Tradespoon model is a little bit more conservative. It does not see 640 based on the current momentum, but that doesn't mean it cannot get there, right? It just shows you that the market is overbought, but it can stay overbought longer than you anticipate. So we have these tools, also signals every day. So today there was 3 signals. One is Apple, one is Ingersoll Rand, and one is AMAT. So if you want to do portfolio construction and you're looking for some of the symbols, we had GE as a signal, but we've been trading GE. I am in Caterpillar, still in Caterpillar trade, and today Ingersoll Rand, right? So the industrials continue to lead. If you want to be diversified, if you're thinking about industrials, Emerson was a signal, right? We traded Emerson this week. All of these are strong signals in industrial sector. You can go to active trader if you don't like these signals, or not like or don't like, but maybe you already have these positions, you don't want to be overweight in industrials, then you go yesterday, right? Yesterday is still a valid signal. Valero Energy, I traded Valero Energy, was a good signal. Apple again, 2 days in a row. Medtronic, right? So all of these are signals that you can potentially find. If you're looking for longer term signal, I would go to weekly trader. This gets updated once a week on Sunday, right? Once a week on Sunday, and you can basically same idea. But you hold this position longer. Weekly trader means that you're thinking about weeks. Daily trader, active trader, you're thinking about days or hours, right? So Microsoft is was a signal, and it gives you entry point. Consider entering at 492, 487. Then if the trade goes against you, exit 482 or 502, right? Or based on our prediction, 508. So we were very close, right? 508, we were at 507.50. So 2.5% stop loss here. On active trader, I propose 1%. If you're doing day trading, it should be less than 1%. If you hold in position for a couple of days, maybe 1.5%. Weekly trade, if you hold it for a couple of weeks, maybe 2.5%. And that's the reflection of these prices. And if you want leverage, then you can basically same signals, right? But you want to say, well, I want to trade options, I want to get myself leverage, or I want to hedge. Then you use weekly options, either this week or next week, depends on your style. You can use monthly if you want to, but this is just a trade setup, but the signals are still the same way. Any questions on the signals? Weekly trader. It's active to go US dollar down. Yes, so dollar is weak. I agree with Kevin. Dollar is weak. It continues to be down. So far, it's been supportive of the market, right? Weaker dollar is good for the United States because they can export more goods, right? It can also reflect, psychology. People want to trade away from United States. I don't know how long the trade is going to last. I think U.S. equities are actually doing a good catch-up trade, but still, Germany is outperforming, right? Some of the countries are outperforming, United States. But now with the tariffs, like you already see pullback in Japan, South Korea, Brazil, they're all pulling back. So I think this, but semiconductors are making all new highs. So that trade, that weak dollar trade, I don't know how long you can stay in it, right? The divergence lasts only so long. and I think US is taking over. Silver is breaking out, right? Gold is continue to grind higher. So that trade is still on, and uncertainty is there. And one way people are hedging with gold, silver, and I agree, Bitcoin. Bitcoin is breaking out, new all-time highs, valid breakout. You know, Bitcoin looks pretty good to me as well. Any questions? And yield, right? 10-year yield is also stable around 430. We were at 420. We're now at 440. Spent a lot of time at 430. So yield is also supportive of market continue to go higher. So these are the models and signals. If you want to see what I trade or what Keith is trading, then you would go to Elite Trading Circle, right? And this is where you can see all of our trades, right? So last 7 days, let's see this week, some of the trades within, and we try to do both stock and option. So JPMorgan, I traded JPMorgan several times. So still into JPMorgan trade. I traded Valero Energy. We saw that signal in active trader. I'm out of that trade. Caterpillar, I'm out of the stock trade, still in option trade. Right? Delta Airline, do some earnings trade. So I sold put spread on Delta Airline. That was a good trade. What else we did? Starbucks, NASDAQ trade we did. What else? NVIDIA. Right? So combination of stock and options, some of them more aggressive, some of them more conservative, to give you an idea of how to manage these positions. Again, you can participate in Morning Bell and Closing Bell live. You can watch the recordings. You can enter either your Discord or phone number and get SMS messages. And that's Elite Circle. And that's something I would propose to try. We do give 30-day money back guarantee. It's a risk-free, right? You pay, you keep it for 30 days. You don't like it, you get free 30-day education signals. So I would encourage you to try it out. If you just want stock, we have Robo-Investor. If you just want spread services, it's a premium portfolio, but it's all following my portfolio and Keith. Right? So this is something you would get. All right. Any questions? Andre, Don, Ed, Kevin, Martin, Robert, TY, Wayne, welcome back. If there are no other questions, some of the opportunities, again, I think industrials continue to go higher. We've seen Caterpillar, GE trade, that continues to work well. I think banks are going to do well, at least short term during earnings season. You have a breakout confirmed. It's pretty strong. Obviously, some of the Magnificent Seven stocks like NVIDIA, $4 trillion, that continues to work well. Microsoft continues to work well. Meta continues to work well. Not all, right? Apple is underperforming, but most of them are continue to have a strong performance. And I think in general, momentum stocks, whether it's industrial, banks, you know, wealth management, or, you know, these stocks, you know, security stocks like CrowdStrike was a signal. All of these are all areas where you can participate. If you see momentum stocks in strong momentum, right, you go to most reliable way, actually, it's very simple. You go to Stock Forecast Toolbox, right? You type in CrowdStrike, right? You go 6 months prediction, and you know, as long as it's positive, then it means the stock is going higher, right? Overall vector is positive, and that means that the model thinks it could get to 634, you know, in the next 6 months. So then you basically say, okay, if it's a positive momentum, then I want to be a buyer. If it's a neutral momentum or downward momentum, like somebody asked me about MGM today, you know, so I would run through 6 months. And Ted asked, he's not here. I can pick on Ted. It's negative, right? Long-term and MGM is negative. So I personally would not buy MGM, right? Even though it looks strong short-term, but it's still in downtrend long-term. So I would not buy it, right? I would look at Hilton, and then I would run through my model and it's stronger trend, much stronger positive trend, okay, I'm a buyer of Hilton, right? If I have to pick and choose. So momentum trade, you can, go to our friends at Bar Chart that do that kind of same analysis, right? You can look at your, gamma flip where it's supportive. You can actually go in and look at their analysis. They also have a trend analysis. Hilton is bullish, short-term bullish, medium bullish, long-term. Okay, this is a momentum stock. I'm a buyer, right? If it's not a momentum stock, especially approaching August and September, I would not. Any questions? All right, Andre, Don, Ed, Kevin, Martin, Robert, TY, Wayne, thank you guys. You guys are awesome. Thank you very much for your support and being here. Next Friday, same time, please join me. I love when you guys show up and ask questions and participate. Keith will be at the closing bell today. If you haven't tried Elite Circle, try it out. It's a great educational tool. We give 30-day trial. You can always get your money back. It's a combination of stock option trade. You have live questions. You can ask me, you can ask Keith. This is a great value proposition. So please try it out. Other than that, thank you very much, and have a great weekend. And I'll see you guys hopefully in live trading room. All right, TY, thank you. Welcome to the neighborhood. Everybody else, thank you very much. Please try to join the Elite. Obviously, I want to see you every day. I get excited when there's a lot of people in live trading room. But if not, I totally get it. Some people just want to learn and listen, not ready to trade. Totally get that. Then try to be here next Friday, same time. Thank you very much and have a great day.